And just like that, the markets rallied, kind of like the Atlanta Hawks coming back from a 26-point deficit to beat the Sixers the other night in Game 6 and eventually in Game 7. The markets did a very similar type of bounce back. Now the question is whether it's been enough of a comeback to maintain the pace and ultimately get back, at least maintain the bullishness we've had, or did we use up all the energy in the comeback that we weren't able to finish it? That's going to be the question from a technical standpoint. So I'm going to show you different charts and how other periods of bounces look like after the type of moves we saw at the end of last week to see whether or not it's any indicative of more bullishness this week as early as tomorrow, or whether it's indicative of, okay, now we're going to have just as big a selling as we saw the buying today. Like that's the kind of mode we're in, these bigger moves. So we're going to kind of break that down from a technical perspective, see what we expect over this next week. And we'll also take a look at a trade of a stock that is kind of breaking out from bullish. I think it's a stock with a pattern that looks like what we want the stock markets to look like. So we'll talk about how to trade that, especially when there might be a little bit of a disconnect between that stock and its breakout pattern and the broader risk appetite picture as a whole. So let's go ahead and get started. Today is Monday, June the 21st, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, the nice little rally we had today closing that little gap right there. You'll see here in just a minute on the chart, on the intraday chart. But nice little, nice move, closing above yesterday's high. We have light pink shading, but just like that, we're back above the moving average. So we go from a red line being below a falling moving average to a green line being back above a rising moving average. So just like that, things bouncing back up. The near-term line bouncing back up above 40, so not back into bullish territory, but back up above 40, and the momentum line. So again, that kind of, keep in mind too that like when we get some of these oversold, when you're also keep in mind too, remember when you're below the moving average is when you get your biggest rallies. Whether it's something like this or like this, you can see we kind of get these moves quite a bit. You get your biggest rallies coming off of these extreme low points on the momentum line. The question is whether or not it's going to change. I mean, look at that. Look at this drop coming off of this extreme low. We had a big 2-day rally off of that intraday low, but then that didn't stop. Like the Nasdaq started its decline. This is about as much of a decline as we had here. If I were to go back here to September, you can see some of the bigger moves to the upside occurred here after the big momentum lines, the extreme lows. We got some moves to the upside. We closed above that day's high point there, and closed above, got up to that high point after these 2 days, and then we continued to decline. So just kind of keep that in mind as we go in. That yes, we had an extreme low in the momentum line. We were below the moving average, so it's not surprising we get a good bounce up here. The question is whether we'll maintain it or not. The Dow Jones Industrial Average, which had been bearish, look, it's been so bearish that its near-term line is actually still below 40. So it's still in bearish territory even with the bounce. So that, again, just shows how bearish the Dow is. And obviously its intermediate line is still below 40, so it is in bearish territory here. The NASDAQ 100, which has been the most bullish, has been holding up better. I guess it's been the least bearish, I guess would be a better way of saying that. It's been holding up better. You can see where it's at. So it's still kind of floating up here. The near-term line is still up about 60. It's falling down. The intermediate posture is so strongly bullish. Market sentiment's falling, but the near-term intermediate posture is so strongly bullish. And then the Russell 2000 basically reversed Friday's move completely today. As you can see the candles over there. Similar highs, similar lows, just opposite directions. The near-term line also still below 40, which again shows how bearish that week had been. And whether or not this, again, the Russell's still stuck in the sideways range, so whether we go up or down a lot or a little, it's still all this noise until we break out. And as we know on the Russell, that's a very, very important support level for the Russell. So if we break through that, anything until we break through that level doesn't matter from a decline standpoint. And until we break above zero, nothing to the upside doesn't really matter either until we can break out of this sideways channel. Come back over here to the S&P 500. And then you can see here, so again, the S&P, the intermediate posture is now weekly bearish. The question is going to be now where, we didn't have an oversold near-term line, which is kind of, the next step after getting that extreme low. Again, we saw that kind of over here. We got the extreme low. It turned into light pink shading, but then we had these bullish moves, these really strong bullish moves in the midst of these bearish runs. And so the question is going to be whether or not the near-term line, when it gets above 60, whether it gets all the way above 80, and whether it stays in this bullish territory or not. It's not surprising that it bounces up from these lows. The question is going to be where it bounces up to. And right now, again, because of what we saw on the Dow and the breakdown we've seen on the Dow, I think it's unlikely. Again, we're actually still below the moving average. And remember, that's when you get your biggest bullish moves, but it also is when you get your biggest bearish ones too. As you see, if I were to go to this chart here and look at diamonds instead of S&P, and you can see, like, when we're below the moving average, you'll get your biggest bearish moves and biggest bullish moves. So that's going to be the question, is the rest of this week is, are we going to follow through on this bounce, or are we going to stay at this bearish level in this bearish territory or not? All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner, this one, in the bottom right corner of your screen. The red subscribe button will pop out. Click on that. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. And number two, you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't have to click on anything. You don't even have to watch. But if you do like them and you want to let us know, you can do it right now with one click, right now even while you're watching. Also, comment down there. What stood out to you? What questions or comments do you have about anything I talked about in the video today? Post those in the comment section below. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live videos and our trading rooms. Again, all of our paid subscribers get access to all of those, whether you're premium or monthly subscribers. Our premium subscribers pay less per month for all that access, as well as they get additional resources and access to our class forums as part of a premium subscriber as well. Our Market Outlook Live video is a highly requested class where I review all the trades that we do in these Market Outlook videos. I do them every day. I do the Market Outlook before the market closes. We also put on that day's trade idea before the market closes. Come down here, click on this heart. It opens up this new tab like this. Hit that like button right there. Also click on this thumbs up icon. It opens up another new tab. Click on that like button too. Again, the more you do that, the more it benefits us, because more people will actually see our content because the engagement's there. You can see more engagements mean more people will see it. That's how Twitter and Facebook works. That's why we keep asking for it. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's get back to the charts and let's take a look at the long-term chart for the S&P 500. Remember, Takayashi body has gotten so small, and it's actually turned slightly negative, and it's a little bit bigger negative body now. So a little bit bear falling PPO. We still don't have the red line, so you notice like we're still not in a bearish pullback yet on the S&P 500. So keep that in mind. As bearish as it was last week, we're still not in a bull pullback mode. We are in the Dow, but you notice the Dow's got back above the moving average here. So we'll see how that ends up playing out, whether or not we might get another week or two of bearishness or bullishness before we finally turn back around on the Dow Jones Industrial Average. If you take a look at the NASDAQ 100, remember it had been still bullish. It's still bullish. I mean, obviously we're diverging up to these new highs, slightly new highs with lower lows, but still bullish candles there. We're still not quite negative, but not the case for the Russell. So the Russell, it did get a red arrow last week, but it got a negative candle, like a bearish Heikin-Ashi candle this week too, and the PPO has gone down about in half from what it was. when it was pretty much parabolic at that point. You can just see how sideways it's been over the last so many expiration cycles here, about 3 or 4 different expiration cycles. When you take a look at some of the other oscillators on the S&P 500, you see they bounce back up above the midpoint. We've seen this before. You've seen it, bouncing back up, back above the negative 100 line. The Dow is the important one, right? That's the one that had turned into a bear market mode, bear market. Well, look at that. We're right back above 40. We're still below negative 100, so we're not quite out of the woods yet. If you take a look at the DMI, the very important DMI pattern, to see whether or not we're starting a directional move or not. Give it a second here to load up. Again, we were close, and we're still kind of like the positive has gone back above 20, but the negative is still above 25. So it's not necessarily like this was a great bounce back. And from the Dow Jones perspective, that's a great bounce back in the positive indicator, but the negative is still up above 30. So we'll see if this holds and we can get back above 25 on the positive. Now we're feeling good about things. But from for some of these other perspectives here, as we all know, you get your biggest bearish moves when you're below the moving average, as well as your biggest bullish moves. And then, like I said on Friday, the Dow had that potential moving up here, but there's now a very strong resistance level that will keep it from going up much further versus, say, like the Russell 2000, which has still got that down below. I mean, that's where we had stopped. So we still haven't really broken down there yet. And if you look at the Qs has got very strong support below us. So it's going to be kind of harder for it to go down. That's why I've said that the Qs, in case of any kind of broader risk aversion trade, the Qs will actually perform better than like the Russell 2000 will, because once you break that 23% line, there's no volume on the Russell in the last couple of years. And it's even worse when you look at it on the last year, It's even worse when you look at it on the 2-year basis. There's just no volume until you get back to those pre-COVID highs. Whereas the Qs, which once we broke those pre-COVID highs, there's it over here. We had established stronger support levels up above those pre-COVID highs that we haven't seen elsewhere. So, it's going to have, there's a lot of lines here, but it's going to have a lot of opportunity for, a lot of support on the downside here, as well as coming from that kind of linear regression trend line you see drawn there in blue. Let's take a look at the 3 green arrow chart here. You can tell on the SPY that MACD is still not negative, and just like that, we're back up above the 17-day moving average and almost back above the 8-day. Again, you get your biggest moves when you're below that moving average. Here's the diamonds. The diamonds, all it did is get back to the 8-day, so it's not out of the woods yet, and not even close to being out of the woods yet. IWM could not quite get back up above the 17-day moving average. So it's still in a relatively bearish mode, with both these lines still dropping below their falling moving averages too. So it's not like things all of a sudden healed themselves here over the weekend and with today's nice little rally. Interestingly enough, that potential runaway gap ended up not being a runaway gap because we filled it in that quickly. But also keep in mind that we filled in that gap now. So that was a bullish draw to be, even if it, considering now that it wasn't a runaway gap, it was a bullish draw, less pressure up there to the upside than to the downside. But there's all this resistance in this area here. Now the question is going to be whether or not we're able to keep it going to the upside. And of course, if you look at the diamonds here, again, the big reason why we dropped so much is there's very little volume in the 4-week chart here. But that's also something to keep in mind about going up so much. It's just as easy to go down and up when there's very little volume here. If you take a look at the Arun indicator, we talked about that Arun indicator and whether or not we get the bearish breakout, which we did on the diamonds there, getting that breakout all the way up to the top. The spiders is really close. So now yesterday's low is the low of the 4-week period. So it didn't quite get all the way up to 100, but it got really close and got the bearish cross. So that's something to keep an eye. Even with the rally today, that's something to keep an eye on. We haven't got that crossover yet on the IWM, and we haven't got it yet on the Qs. The 4-week low is still way over on the left of this chart when you look at the Qs. right? It's way over here, and now it's going to move up a little bit to these lows, but still we're not anywhere near the lows right now, so that we're not close. This is the furthest away. The diamonds have already had it, and the spiders are the closest, because now that will end up being the low point right there. You saw the volume in the trading range. Let's just review that here really quickly. The volume was less than what we saw on Friday, a little bit above the average at 71 million. The trading range, if you notice here, was about 5 points without the gap. We opened at 416.80. We closed, 416. The low, was at 415.93. We closed there at 414.92. So it's $1 of a gap, and we had 5 points. So it's about 6 points of a range. When you look at it here, 6 points range and 70 million shares trading hands. Those are both numbers that are above this level. So again, you get your biggest moves. You get your biggest moves when you are below the moving average, both to the downside and to the upside. Now the question is whether we will stay green and just get smaller, or like we see here, or are we going to follow through with now another red, right? So big red, big green, and then big red, or are we going to stay big red, big green, and then staying green with smaller greens? That's the question as we go into next week. One last chart to look at here is the volatility index. The volatility index came back down, but you notice now the question is going to be whether or not, we talked before, so you can't go from 80. There's nothing's ever 100% or 0% technical analysis, but for the most part, it's hard to go from 80% to 105%, just like that in one move. You generally will stair step and work your way up with higher highs and higher lows. So now that we've gone up to and hit this peak of resistance at 90%, now the question is whether this will be the low point. If not, if we get back to 80%, okay, well then it's got to start to grind again. We have one day didn't break the grind. But if this ends up being our low point and we kind of get some more volatility the next day or two, and we make a run up to 95% this time, and then kind of stay in the neutral zone for a little bit before we break, then we're a lot more to break out to 105% or higher, and have the type of move that would actually start an intermediate run on the S&P, because that's what the VIX tracks, and not just on a narrow index like we've seen previously within the Qs. They've had their own 2 exhales, and now currently with the Dow, which is actually on its own exhale here. All right, so to summarize our technical outlook for the day, again, it was a nice bounce back day today. We obviously did not continue the selling from last week, but it's not an unexpected bounce back day today, considering that what we've always talked about before, about how you tend to get really decently bullish moves coming off when you're below moving averages. You get big, decent bullish moves when you're coming off of extreme momentum lows, like we saw on Friday when the momentum line got below. So now the question is, are we going to bounce up and continue this run and then get a new bullish near-term rally and just kind of get going and nullify, or is the fact that the Dow Jones Industrial Average has already started this intermediate pullback a sign that the rest will follow? And today was just a one-day reprieve from that. So from a technical perspective, today's move actually it's very typical of a bullish move while you are actually still in a decline. So we'll kind of keep our eyes on tomorrow and Wednesday, how we follow through with today's move or not, and whether we can again push up to a new bullish near-term rally, which I think is the lower probability. I mean, nothing's ever 100% or 0%. I expect that to be the lower probability. I think the higher probability is, and now you'll have people taking advantage of this rally to be able to take some profits off. Maybe they weren't able to get out when they wanted to last week because of how things dropped, especially on Wednesday and Friday. But now today they can get out a little bit better prices, and that might put some pressure on things. So again, we've seen that kind of patterns before. I expect that to actually be the case this go around. But like I said, nothing's ever 100% or 0%, and And the idea that we'll be watching for in the next day or two is whether we can follow through on today's rally and then kind of break the bearish pattern and re-engage a new near-term run and maintain this current intermediate run that we're on up into the beginning of June, right? And remember, this is the worst part of the year from a seasonality standpoint, one of the worst parts of the year, this last week in June. So we'll see if that plays and how much that actually plays into it and puts some pressure on. So what do you think? Do you agree with that assessment? Do you disagree? If you disagree, let me know. Let me know either way, but especially if you disagree, let me know in the comment section below what charts or indicators you're looking at that suggest why you should be why you're either a lot more bullish than I am or a lot more bearish than I am. All right, now let's take a look at what drove the price action today, and you can see, I mean, there's some clear outliers in both directions. Equities and gold and commodities and U.S. equities, developed market equities, all pretty much stayed the same. IWM outperformed, the Qs underperformed, and the dollar was down after having a nice strong rally, and long-term bonds were back down too, with small caps really outperforming. So let's take a look at how that looked like here. Let's take a look at how that looked like from an individual standpoint. So let's first start off taking a look at the U.S. dollar. And remember, it was so bearish last week, and the dollar was so bullish, the euro was so bearish. That's the rally it made. So, I mean, does that look like things have changed? I mean, I wouldn't be surprised if we continued a little bit higher up to this 1975. And again, just an oversold technical bounce. If you take a look at where the 8-day moving average, that really short-term moving average is, we're still not even close to it. Like, that's how deep we were. So again, it goes to show how bullish we can be before we actually meet up with some short-term resistance level on the euro-US dollar. The same thing applies on long-term bonds. That's the drop that we had in long-term bonds. It basically is still pretty decently above the 8-day moving average. So, again, has things changed now? Are we as parabolic as we were? Of course not, right? We're not going to continue just to go up on bonds and down on equities. That's not how that's not even how bearish pullbacks work, right? There's the biggest up moves are during the pullbacks, right? So there's going to be up moves. There's going to be these pullbacks because you get so far away from these moving averages. There's a return to the mean, and that's pretty much what we saw on a lot of these. I mean, you look at the commodity index, which had also kind of broken down the close to a MACD, but you see, like a lot of equities, bounce back up to the 17-day moving average. Now, can we break through this and keep going? That's going to be the important question going into tomorrow and Wednesday. And with the moving averages still below falling their own, with the MACD and stochastics, both below their still falling moving averages, the likelihood is that we'll probably hold resistance here in these areas and roll back over to the downside. There was a lot made about the 10-year yield. Again, the 10-year yield still hasn't really broken that 23% retracement level that we've been kind of waiting for it to break for quite a while, right? That's the bullish move that it's been on since August, a very, very strong rally coming off that significant low point, deep later than the March low point for equities, right? Yields made their own market sentiment low later, so this is this market sentiment run, and you notice it's pulled back to the 23% line, but and we're in bearish territory here. We're below 40. We're in the negatives. We're below, the moving average there on the MACD. And if you look at the market forecast for the 10-year yield, you can see that we are below 40 there too. Market sentiment lines dropping below 50. So we are in bearish mode, but we're not quite, and on an intermediate basis especially, but not quite there necessarily on a long-term basis here. We're still holding a very, I'm trying to get rid of that, a very important support level there. So, and we also see this too. I've shown you this chart as well. This the Qs relative to IWM, right? That's an important relative strength sign that we've been kind of really keeping a close tabs on. We had that nice breakout pattern on the weekly chart. Here's the weekly chart. We had that nice breakout pattern. We're just pulling back down a little bit. If I look at the daily version here, And then let's come down here and let's throw on the exponential moving averages on these, and we'll do the 8 and the 17, and then here we'll put on that simple moving average. Where is it? Simple moving average. I'll put 30 on here. There we go. All right, so again, you see how even the relative strength line, that big discrepancy between small caps and the Qs, even that chart still just got back down to the 8-day moving average after being extremely high above it. So that's the kind of a little bit of a drop down that we've gotten here today, that kind of bounce back from extreme levels to not so, it's still kind of bullish in this case on the ratio chart, but not as so extreme. This is the relative rotation graph over the 1-year chart, and you can see these cyclical areas, energy and industrials, materials and financials, it's really moving down to the left. Well, if you take a look here at how the sectors performed, energy, financials, industrials, materials are all the biggest winners today, with real estate down there. So the question is, like, is one day changed? I mean, you're up to the right on utilities, you're up to the right on healthcare. Technology is doing, real estate's coming down. Staples is still bearish. XLK is acting as a safe haven. We talked about the Qs with their margin of safety acting as a safe haven trade. So as one day change these patterns, they're still pretty bearish on the rotation chart. And they had a great day today. The question is whether or not, it's more than just a one day kind of a thing. All right, if you look at how the sectors performed, obviously there's energy bouncing up sharply today. There's industrials, materials, financials all bouncing up. There's all your safety trades, including your QQQ sectors, lagging behind. That's to be expected. But now you look at like the 12 grid and say, okay, are we back to being bullish again? That's the big question mark, right? Well, let's take a look at this chart and see whether today's bullish moves re-engage new trends. Well, let's see here. There's financials. Does that look bullish, right? There's industrials. Again, the biggest moves of below moving averages. There's materials. I mean, how confident do we feel in those situations? There's utilities. There's staples. I mean, these don't look like the most bullish patterns. They were bounced back from extreme lows, and we might continue with a short term, but they don't look like the kind of moves that be like, oh, okay, now we're bullish again. We're still dark pink shading. We're still red line. We're still well below those moving averages. Discretionary hasn't broken out to new highs, so that's still a threat to turn into dark pink shading and a red line really soon. Technology is not breaking up to new highs, so the double top there is still a threat. Communication services is at a light pink shading now. It didn't bounce up enough to get back, to keep it from falling below 80. Energy the same, it's at 64. It's still falling, and still, did we bounce up enough to stop that fall from getting eventually to dark pink? Healthcare, so you see how, as bullish as we were today, this isn't like, oh yeah, we're breaking out here to the upside. No, now we're just not so extremely bearish. Will that open up the door for, the selling to come again here pretty soon, because we've recovered so much and it's allowing it to keep going down without maintaining such an extreme. The more extreme it gets, the more we bounce up like we did today. And like I've shown you here before, the question will be whether or not on this particular chart right here, it's not surprising to get big red and big green. The question is whether we're going to go back to big red and stay in a bearish pullback, or whether we're going to stay green and just get smaller and smaller green and stay bullish. That's going to be the question going into the rest of this week. So we'll know as early as tomorrow. And I lean towards, another big red candle or two this week, but that remains to be seen, and that's what we'll be paying very close attention to over the next couple of days. All right, so for our trade idea of the day, I wanted to take a look at a stock that did again, this might be the pattern that we kind of all think that markets should be showing. If we take a look at Roku here, we think, okay, it had a little bit of selling, and boom, look at that overbought cluster on Friday. Very, very good sign. And when you get overbought clusters and the intermediate lines crossing above 80, the intermediate line is even now, still above 80. We broke up to new highs today. Dark green shading in the green line. Market sentiment lines rising, close to getting back out above 40 because we've been pretty bearish here. And it's been on its own little exhale. Roku has been. If you take a look at its Bollinger bandwidth, you can see that we broke up above the upper band on Friday. We continue it today. There's no volume up here. All of our volume is in this area at the top of the value area, and now now that we're kind of breaking out, there's very little volume. The path of least resistance right now is to the upside. When you look at the directional movement index, you can see this is what a bullish bounce back looks like here. We're above 30 in the positive index, or below 20, so we have a rising ADX. It's a directional move down there. You look at the RSI and the CCI. We broke above 60. We broke above 200. Bullish breakout moves. Now again, nothing's 100%, but these are the kind of patterns you want to see if you're anticipating a kind of a breakout move. We're up above the cloud now. We weren't above the cloud before. We're above 1. We're not quite above 2 yet. We're not above 65 yet. So those are the levels that you see that kind of confirm the trend on this particular chart. But we're getting close. At least we have a bullish trend, a weak bullish trend, and at least we're above the cloud now. So all really positive signs. The red line also above the price there. When you look at the 3 green arrows on the 2-line version here, that MACD is turning up and starting to diverge away from 0. So that means divergence here. The stochastics has been kind of flat, but at least it's been flat around 60. So if it keeps going up and it's in the bullish territory, it's just at the low end of the bullish territory, but a good sign from that perspective too. So lots of good opportunities. Now, in our class portfolio, we already had a trade on Roku, an iron condor spread for July. But considering how bullish we are heading into some of that resistance there, and again, considering the broad, I would look at buying like a call option on this. Number one, they're very expensive options. That makes it a little bit prohibitive from a risk standpoint from what we like to do in this class. So long call verticals would look really good. But again, I'm a little concerned about the directionality potential that it has if the market itself isn't as bullish as what this is what we want the market's chart to look like, right? And Roku's kind of doing it on its own. So it would have a lot of resistance to be fighting through if the market's not able to also follow the same kind of pattern. And so instead of doing a long call vertical, we're going to take a look at just doing a bull put spread. So selling the 367.5, buying the 365. This is what it looks like. If you take off the, let's see here, let's take off the, there we go. So there's the trade we have here. We don't have the iron condor on here. There's our trade. So if it keeps going up, here let me reset parameters. That's the break even. Reset parameters. Delete simulated trades. There we go. Now that's the break even. So there's our trade there. And if you look at where that break even is, let's set that break even onto the chart. So give me 1 second to do that. There's where our break even is. So here, let's look at it on this chart here. So this breakout up to new high would have to kind of be nullified for this not to work out. I mean, it can pull back, but as long, again, remember that was an overbought cluster there, a bullish overbought cluster. So as long as we hold that, we're fine. If we don't, then we probably don't want to be in it anyway. And I've got some room to work with to the downside anyway if we come down there, because if you notice, for me to lose $570, we have to come all the way down here tomorrow to 338.25. So that means we'd have to come down here for me to get out of the trade with a loss of what I'm trying to make, similar to what I'm trying to make. So I can let it try to hold that support and give me some room to work with here on any kind of short-term exhale. But if you look at that near-term line, as we talked about before, it hasn't been necessarily extremely oversold. We bounced back up. We just barely crossed above 50, much less, getting that cluster above 80 yesterday. So even the near-term run is just starting, and it's really strong. That near-term line getting up to high levels that we haven't seen for a long time. We saw that over here, and you can see how much it kept going up when we got to those strong levels before, and same thing over here. So I like how strong that near-term rally is. I'm not as concerned about an immediate pullback as I would be if the near-term line were, say, peaking right here or here in some of these areas where it's not nearly as bullish on a short-term level. All right, that wraps us up for today. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums on our website. All of our subscribers, even our free subscribers, get access to that forum. So let's open up any new thread with any questions or any comments you have about what we discussed in the video tonight. Reply to other people's threads, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, like us on Twitter and Facebook too, and comment on the video down there. Have a great rest of your Monday night, everybody, and we'll see you all next time.